Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Load up for discussion today. We have Solana outperforming the majors, up a few percent to $210. Bitcoin is also back to 111K. So we'll touch in on the conversation around the majors. We'll talk SEC and CFTC allowing trading of certain spot crypto tokens on US registered exchanges, which I think is pretty big news. And we'll also talk about Pump Fund announcing Project Ascend, a series of updates that will 100x the Pump Fund ecosystem by 10xing creator earnings. So big stuff to talk about on crypto and media there today. We'll also discuss the latest on price action on crypto and NFTs as usual, and have a general discussion on where we think attention is flowing. So stay tuned for that. I've got Legendary and Bread in the co-host seats with me today, and we are ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky, and we do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Wednesday. It is the 3rd of September. How are you doing? How are you feeling?
GM, doing quite well. Excited for the show today. I feel like we have lots and lots of items on the list. Also, first show where the three of us are hosting again together, given that I'm back from holiday. So excited for that too.
Pretty good to get the three back together. Also, we said yesterday that we'll do a little bit of a portfolio update, conversation, chat, kind of brainstorm session. So we'll do that as well, kind of in between the headlines and in between the roundup and then a discussion on the headlines. So we'll definitely get into that today as we kind of clock into the final part of the year.
Is that a way to coerce me into actually making modifications to my portfolio?
Well,
forcing me to talk about it and potentially do it on the show?
If we don't talk about it, will you ever sell those NFTs?
No.
Ever? No. Exactly.
So
we're gonna schedule it.
Broke the news. That was it.
Exactly. So if we don't talk about it, Brad, we feel kind of responsible at this point that you're holding a ton of NFTs. You're gonna have to sell them at some point.
That's true.
So look, that's what's on the agenda for today. Brad, anything else going on? Anything else on your mind before we hit the main stuff?
I'm just excited to have Ledge back. It's been a while. I mean, we've been doing good, doing our doubles. But gang's back together. Yeah, things are exciting. How was your trip? I mean, you talked about it yesterday. I wasn't on the yesterday's show though, but like you said, it was good, rejuvenating. You said this place scared you when you got back. Maybe that's the wrong word, but it caught you off guard.
Trip was amazing. Definitely the most impressive vacation or holiday I've ever been on.
Was it a mandated no Twitter, no X? Like, were you're trying to stay as off a timeline as possible?
Yeah, I never did that. Like, I mean, I went on holiday before, obviously, but I always did like the posting and everything and advisory calls, and most often travel with the roadcaster, do the shows, do everything. It was like, I need a full-on break after so many years in this space to get a bit of distance and kind of reflect of what I want to do in life and where I want to go in life, and think about those big questions. And maybe got a bit scared by CT. Maybe came back with a quarter life crisis. I don't know. Like, still.
I mean, you don't have to reveal anything. Did you have any revelations?
I did. Yeah, I did quite a few.
That
was still the entire show. And I think he has other things planned for the day.
Yeah, I do like. I really like the idea. I actually like the end of year for this. I'm quite a big like New Year's person, like New Year's resolutions, review everything, and try to make a bunch of changes if you're ever going to do that. I do like that process. But
I had some friends that would every year they'd have a dedicated trip where you literally just go up into the woods and have like almost like a workshop with your homies, where it's like you write stuff down, you try to review, say what happened, what went well, what went bad, like what you would change. Like,
yeah. I don't mind it. Yeah, I like it. I like kind of taking the break and coming back with some deep revelation. I kind of like being a bit dramatic in that way. But
it reminds me of this Billions episode where Bobby Axelrod and his co-founder, like at their hedge fund, go into the woods for ayahuasca and rethinking life. Maybe a bit more extreme version of what you just described, Brad.
I'm down with ayahuasca.
First modern market meetup that is not a breakfast. We'll go into the jungle somewhere and get some ayahuasca going to figure out the next portfolio allocation, maybe. Right. Talking of portfolios, let's get into the main stuff as usual today. We've got a bunch of interesting stuff to talk about. Let's start as usual with the price action, starting with the majors. We've got Bitcoin up 1.5% to $111,000. Sounds much better up there than it did when it was back down beneath 110. ETH is flat around 4.3K. XRP is at $2.85. BNB is flat around $853. Solana is up 4%, outperforming at around $210. We have Cardano up a couple of percent to 83 cents. Hyperliquid is up 3% to $45. And Sui is up 2% to $3.30. Getting into the meme coin side of things, we've got everything up like a small amount, I'd say. Doge's up a couple of percent. Pepe's up a couple of percent. Pengu's up 5%. That sounds as one of the bigger movers. Pump Fund is up 5% again, pushing towards 3.8 billion. It's been a big outperformer in the last week, up 30% on the week. So
all the bread trailers are eating right now. I've been chill. I didn't know about this announcement. We're going to talk about it today, but like that timing worked out well.
Did you buy some though?
Yeah, of course.
Oh, okay. Excellent. So I thought it might have been one of the things we just say an excellent.
That was one of the few things that I said I rotated into. Like hype and pump.
There you go.
Bread changed last month. Like typically when we asked you trading questions, you're like, nah, I'm happy with my portfolio. Now you go like super self-confident. Yeah, of course I traded that. Like what the fuck is this question?
I made it. I had a wake up moment. Maybe that's what it was. It was just like yeah, it was. I think it was part of the NFT discussion I had. You weren't here for that, where it was just like I had the post-coital like revelation. It was like, what the fuck? Like looking around, like I had the clarity in my mind, and like if I'm holding on to these fucking things for 4 years, hoping for a 2x, 3x, 4x from here, whenever like I have extreme conviction in something, like what am I doing? What am I? Yeah,
beautiful post NFT clarity.
Yeah,
there you go. Post NFT clarity. Like that one. SPX is up 4% as well today to $1.10. Fartcoin is up 7% to 80 cents. WIF's up a couple of percent as well. Rect is up 4%. So I'd say memes kind of up single digits roughly, or something in that vicinity. Trolls up 10% back to 160 mil. Getting into the headlines, which we are going to be talking about today. We have, I have got them here. We're going to be talking with Solana outperforming majors and what our view is across the majors. We've got SEC and CFTC allowing trading of certain spot crypto tokens on US registered exchanges. We've got Pump Fund announcing Project Ascend, a series of updates that will 100x the Pump Fund ecosystem. Brett's going to take us through that a little bit later. I think some of the first bits of data on how much creators can start drawing down has just been shared. So I put that in the tweet, one of the tweets in our prep for today's show. So very curious to see what those numbers are looking like, and whether we're going to see a stampede towards streaming on Pump Fun in a little bit. Some other notable price action. Collector Crypt token card is up 400% to 150 mil FTV as investors seek Pokemon RWA exposure. We've been talking about that in our Telegram chat as well. Shout out to Cam, who provided like a bunch of other Pokemon RWA sites at the moment across different blockchains that we are all going to be researching at the moment. I wouldn't necessarily suggest buying a token up 400% in one day, but it has been noted that there's been a lot of Pokemon chat, if you actually think about it, the last few weeks on these cards. So Ledge, I know you've been collecting a little bit here. Do you have a specific view on Pokemon cards, whether you're talking from the token side or from the kind of just the card valuations?
I like Collector Crypt. I've been using their platform quite a lot to gamble for Pokemon cards. I am still a fan of the vintage cards mostly. I mean, obviously everything has been moving in the Pokemon market, and Tone World in our Telegram chat put it perfectly by saying next year we'll have the 30-year anniversary, and obviously that creates even more hype and even more mind and market share. But I typically always like the base set cards, the historical cards, the pre-2000 ones, and I have been collecting. I did share that before I went on holiday. Got a Shadowless Venusaur, Charizard, Blastoise, PSA graded set before I did go on vacation. I'm still want to increase my exposure. I need to aggregate all of my on-chain Pokemon card holdings because they're like across different platforms and get a better view on what I have.
Sure.
But I do plan to spend even more money on that.
Interesting. Okay. Maybe there's something we need to go on, Brad.
So like my veg out time is just like sometimes I'll just go on YouTube and watch some shorts, just random shit, cop videos, people eating food. Pokemon cards have like proliferated pretty heavily on YouTube. Like literally just like I'll come up across videos, and because I watched like 3, now I keep getting flooded with them. And these fucking dudes have like, you know, truckloads of packs in front of them. And they're just sitting there just opening these fucking things. Like,
dude, people are
like,
obsessed.
Legendary, you're talking, and like again in my area, like Pokemon as a brand is also just crazy. Like there's a little park next to us, and there's these people walking around playing Pokemon Go all the fucking time. Like there's parties going on over here. So like I'm seeing all this stuff, and I'm like, it feels like a mania that I'm just like outside of looking in, like just like objectively, I would say. And but you want to increase your exposure. Like you think it's still a good time. It's going to go higher. Why?
Because I mean, my thesis is simple, right? So the 1998, 2000 cards, 25-year-old cards, basically my childhood. Like I'm in my early 30s.
I remember. Yeah. I had a shit ton of those things.
And now you start to accumulate more money, and now you start to experience that nostalgia. And I couldn't afford these Charizards and all those things when I was a kid, and now they're a couple grand for, say, the PSA 7 Shadowless one, which I bought. And obviously the top end ones are like multiple 6 figures. And as these people, as our generation gets older, it hopefully also manages to accumulate more wealth and have more money to spend on collectibles and nostalgia that they had as a kid. Similar to how boomers are basically controlling the real estate market these days. I assume that the Gen Z, Gen Alpha won't necessarily be too interested in our like vintage Pokemon cards. It's gonna be our generation.
Yeah,
and our generation will accumulate more money and hopefully also see some of that inflation, if you want to put it like that, trickle down to the base set Pokemon cards as well.
I have a question on this though. So I love the thesis. I think that's correct. I also think that the one generation or a couple of generations beneath us may be less interested in it. Maybe they'll have their own thing. And so, but there's still decades for our generation to play that game, right? Because we're not that old yet. The question for me is it related to crypto in any way? Like, is it correlated? To what extent is it correlated with crypto doing really, really well? And in some ways, look, the IRL market, is doing really well. And, apparently these boxes sell out super fast. But is accessing the crypto wealth, like who's the marginal buyer on top of that? I feel like we are the marginal buyer because suddenly you unlock all this global crypto liquidity, who are the perfect age to purchase this specific type of asset. Then who's buying it next after that is the question. And is it always reliant on crypto wealth in that respect, if you see what I mean? What do you think?
I think crypto wealth is helpful, but it didn't like start that hype, or it didn't start the price action. Like if you look at the Paul Logans and other people who were very prominent about ripping booster packs on on YouTube. Sorry about that. And
Logan Paul.
Yeah, Logan Paul, and buying the most expensive Charizard, etc. Like that happened basically pre-crypto. Now some crypto money's being added on top of that, and that's certainly meaningful.
There's all the sports card mania as well, right? So it's quite very much related.
I think there's been a study that was looking into purchase behavior of like the new crypto money, like the nouveau riche out of crypto. And it did measure meaningful impacts in stuff that we find cool. And there was this phase where everyone was like, this period of time where everyone was loving the Cartier sunglasses during COVID, during the last bull run. And they were actually seeing and recording a meaningful increase in sales. And I think they also implemented crypto payments pretty early on, as did a lot of luxury brands, as did car manufacturers, because they basically saw that like the crypto bro spending behavior is insane. Like money is made so quickly and is instantly being deployed into luxury goods because we like that flex. So I would definitely also assume that, if we now think that Pokemon is cool, like crypto money is going to flow into to Pokemon cards as well, but I don't think that we were the ones to like, you know, start that hype and increase the prices. That certainly was the like analog collector base.
Yeah, I think that's fair. This is a good point from Kimon Matzinger. What happened? I think we kind of touched on it. What happens to these cards when the generation is old and the new kids don't have any connection to these cards? I think it's the same thing that's happening to the top end of the traditional art market at the moment, which is kind of stuck. I think the prices have stopped. Our generation are not going to these auctions and buying like high end top pieces of art. And if you did, which I have like gone and looked at these auctions, you'll be shocked what you can get for like 20-30K at it. Like you can get like a really great artist with a really like statement piece, you know, huge piece to go on a wall, and then you realize that, oh, that's just the cost of one squiggle, for example. Like we're really dislocated sometimes, particularly when things get hot in our market versus the traditional art market. And I pay attention to that that like kind of discrepancy a little bit more. So yeah, I think it's a game for this generation and there's many years to run. Although that's the one thing that's in my mind. It's just like, is this just like crypto capital? Bitcoin's up, all our alts have gone. Like people have made a bit of money last few years, and therefore, you know, I would have rather bought, you know, a year ago. But
I can't get the real estate parallel out of my head that Legendary just dropped on us. He's like, yeah, like the generation above us collected houses and real estate. They want property, and like we want cards. And I was like, what's fucked up is I'm like reflecting on my own positions. Like I'm trying to sell my place. I don't want to own a house. I don't want physical stuff. And it's like, hey, watching these videos, I kind of want some cards. Like, so like
real estate is so screwed, man. Real estate is screwed.
I've been trying to sell my place for like 2 years. It sucks.
Really?
But yeah, it's like, so well, like one, that's just funny. Like, okay, like that's our thing. Like these physical collectibles, but like also is everything going digital, right? Like right now it's Roblox shit. Like is Roblox the Pokemon of the future? And to address the claim of this stuff aging out, I think the one thing that we have going for us, or that Pokemon has going for itself, is that it's like an evolving brand, right? So like it's constantly being it's a touch point for like all kids everywhere, always. Like it's so large. Like maybe not as proliferated now, but yeah.
Okay. Yeah, I think that's a nice point. I like this kind of general asset portfolio conversation as we kind of branched off into cards versus crypto versus real estate. We did say we're going to have a bit of a portfolio chat today. Let's just finish the roundup though, to get everyone up to speed with everything else that's happened, and then we'll switch right back to it, because I think that's an interest. That's a good conversation to have as we've hit September and people are thinking about, like, you know, just repositioning or just changing their sizing as we hit the rest of the year. In other news, we had Atlas Merchant Capital CIO explaining Hyperliquid's assistant fund on Bloomberg. This firm, the other CEO is the former CEO of Barclays, and I watched an interview with them the other day. They're now building this thing out for Hyperliquid. It's so surreal watching someone explain the assistant fund to someone on Bloomberg. That was
just like
fun.
the mechanisms under it, like how it actually behaves.
Like the host is literally asking them, so what's the utility of the token? And he's trying to explain, like, look, 97, you know, when you see all these narratives on crypto Twitter all the time, like 97% of the token goes back and buys the thing, and all of this free cash flow it's very surreal. Xstocks expands its offering of on-chain stocks from only Solana to Ethereum 2. And that's paired with another bit of news today. Ondo Finance announces 100 plus tokenized stocks and ETFs will go live on Ethereum today. So these stocks are really coming on chain. I'm just bracing myself for when Hyperliquid, when Unit comes with the stocks. That is going to come. And so I'm very, very curious to check this volume. I think Xstocks is probably winning out at the moment, would be my instinct, although I want to see the numbers. It was only on Solana first, now coming to Ethereum. Definitely want to get a sense of what's going on there. ETHZilla, I thought this was interesting. ETHZilla deploys $100 million of its ETH holdings into ETHify's restaking pool. Remember, this is one of the ETH treasury companies.
How's the token doing?
ETHify or ETHZilla's?
EtherFi. I'm curious because like as like ETH had recovered a little bit, I had noticed because I have some EtherFi from previous airdrop stuff, and I noticed that I actually recovered pretty well in a few instances. I haven't checked it in a while though. And like, and I'm curious because this is the thing that we were talking about, right? Like, this is the second order effects of these DATs because they can actually deploy this stuff into DeFi to get more yield, to be competitive against each other, to like actually make the MNAV above 1 something viable, right? Or at least keep it close to 1. So, like, if you position yourself for the tokens, not great.
So this is on a long time frame. So in the last 7 days, it has been, well, it kind of dipped beneath around $1. Yeah, I mean, I think maybe it's still got some unlocks going on. The FDV is about $1 billion. Obviously, at one point in time, a long time ago, it was trading as high as $3 billion. So I think there were unlocks, investors unlock, but the product at EtherFi is really, really good. To be fair to them,
they've been having success with their card, like so you have your ETH, you put it in there, and then you can use use a card, and it pays with the yield that the ETH earns, or something like that. Like that's the combination. It's just I saw the TVL for it is going up really well.
Yeah, good product, and yes, as you said, very interesting to watch these treasury companies deploy into DeFi and see if that flywheel kind of gets going and to what extent how the market kind of responds to that, because that is one of the better cases for ETH, right? Because Bitcoin, no one's going to be putting their Bitcoin onto Polkadot. Well, not these ETFs. Obviously, individual holders might. We do. We'll be like, okay, we can get this juiced yield on Polkadot for this period of time. But, ETF, treasury company buyers are not going to be doing the same thing with
institutional
Bitcoin.
players can't do that.
Yeah, they're not going to do that. Okay. So that is that. Just a couple of other bits of news. We had Linnea announcing incentives targeting $1 billion of new TVL for providing liquidity until October 2026. Rabbit integrates hyperliquid perps into its wallet UX. Rectrint announces $2 million digital asset treasury investment.
Is that live now?
I believe it is. I saw a tweet saying that it was. Someone else confirmed. I think it'd be good to go and check. But
Rabbi, was it to Rabbi or to Rectrint? The question. Rabbi is live. Yeah. I already. Okay. I can even see my liminal stuff. So basically, the sub accounts are imported as well in Rabbi.
Nice. Well, we knew the like they teased it, but I didn't know they actually went live. I want to research this because that's useful.
Yeah,
and it gives you the P&L as well, which is pretty cool.
Good stuff. Prominent trader Mitch launches a creator coin, runs as high as $30 million before pullback to 23. And then finally, we're partnered with Yeet. They announced a $25,000 NFL survivor pool starting on September the 4th for new season for players ranked gold or higher. Well, that's cool on the NFL side. Right. That is the Web3 roundup. We are going to get into the portfolio discussion in a moment, and then the usual headlines, because I think that would be the right order to do things. But just before we do, we are excited to announce today's show is sponsored by the crypto game Gigaverse. Legendary and myself are investors because we've known the founder Dith for some time as an excellent operator, highly in tune with crypto market dynamics. Gigaverse has found PMF on Abstract and is a very successful crypto game. And they have some huge announcements this week on which we are delighted to support. The first announcement is today's Gigaverse Eggs mint, which will take place at 11 a.m. Eastern time on OpenSea as an open edition, open for 7 days. More on that a little later in the show. Shout out to our friends at Gigaverse for working with us this week to amplify their huge news this week. So we'll circle back there a little bit later. So getting into this portfolio conversation, Ledge, you went into cards, we went into real estate, went into a variety of things. You've had a little bit of time off. You said you came back with some revelations as it relates to portfolio stuff. What did you come back with?
So what I've been observing is that my stable exposure has been increasing more and more. Like I am now back above 50% stables, and I don't like that. I don't like that at all. And we'll touch more on that when we get into the first main headline, when we look a bit at US debt, the treasury yield and stuff like that. And all of those things are pointing towards being allocated in assets, whatever assets that might be, if you like stocks, real estate, Pokemon cards, crypto. So I'm looking for meaningful ways to like lower my stablecoin
Reduce your
allocation
stablecoin
again, to
exposure.
reduce that. Yeah.
Okay,
And also
first question to bring people some clarity though. Where did that increased stable exposure come from? What were you kind of selling off? I guess not necessarily because you wanted more stables, just because you I guess you wanted out of particular classes of assets and wanted to get into, kind of wait and see before the next thing. So what have you decreased in order to increase that?
Yeah, no, that's a good question. I've been taking profits across the board, like from trades that I made on the one hand, basically going into stables directly. I haven't been like selling anything massively other than getting out of Solana more and more. I mean, I did that, massively at the start of the year, but still had like some meme coins left, some bags here and there. It's like so many Sol wallets that accumulated over this last crazy cycle. I was like, I just don't have the time to track them. So I wanted to get rid of them. And I did sell a tiny bit of Bitcoin, ETH, a bit of hype as well, just because the numbers were getting too big. But then again, I did take most of those profits into Euro, I realized, not into into on-chain Euro, not into USD, because you just don't want to be holding too much in dollars, and all the things, so all my dollars basically should be working somewhere. Like they should earn yield to at least account for the fact that inflation is high and dollars not looking too great against other currencies like the euro, which is my home currency.
Yeah.
But apart from that, I did buy, and I've been speaking about gold for a longer period of time. I do want to increase gold exposure as well again. I've been increasing my savings plans in stocks as well.
Can I ask one question on
Yeah.
gold? Because I guess this is helpful for clarity, because I'm kind of going through the same thing. Do you want to increase your gold exposure because you already have some gold, but it's not enough? Or is it, look, because we're like kind of coming at this stuff slightly newer, right? Or is it because you've just historically never been allocated to it enough at all? Because that's the camp I'm in with gold. It's just like, why on earth would I have bought gold? I came into the space with like 2 ETH, and I was like buying NFTs and then like holding a ton of ETH and then watching it crash and then like figuring out what I was gonna do. There's no gold in my original thinking. Now it's something that I do want to think about for that stable portion, because as you said, it seems like let me just bring this up. I mean, maybe you were going to bring this up, Ledge, but I'll just, since we're talking about it now, this chart of global gold reserves. Have you got it, or shall I? I've got it here as well. Don't worry. This is a chart showing the kind of global international reserves across different countries and the extent to which they're holding gold, dollars, sterling, yen, French franc, Deutschmark, euro, and anything else. And what you can see, and this has been circulating the last few days, what you can see is that big red part over the last few decades is obviously dollars being the kind of predominant main world currency. But what you can also see at the bottom is this kind of slowly, there was a period of time where gold had really tailed down. And so from the 1980s onwards, you see gold playing a much lower role in central banks' reserves for a couple of decades. But what you can see now in the last few years is this kind of ramping up again. And I think that's definitely the start. And we're relatively early in the start of this new trend of like de-dollarization. And so for me, maybe likewise to you, this is like a nice part of the portfolio that maybe you just want to keep adding to over time. I feel like you can be fairly confident in gold in its current kind of geopolitical setup. But yeah, that's me, long way of asking you the question of like why specifically for your portfolio gold is relevant.
Yeah, I mean, if you look at this chart, just bring it up once more. There we go. If you look at this chart, you can also see that gold has flipped the euro over the last couple of years already. So this is this was like part of that thinking that we've been seeing this move into gold. And I started buying gold for, the reasons that you just explained. But then I thought about like my total portfolio size and like me just buying, a couple ounces here and to just Stefano's question, digital gold, no, for me, it's always going to be physical gold. Not because I don't like digital gold, it's just tax reasons. If I hold gold, physical gold, longer than a year and I sell it, it's tax-free. I don't have that advantage with digital gold. I would love to buy on-chain gold and farm yield on that, but just the tax advantage is too big to ignore. And then I was like thinking about my total portfolio allocation, and if I want to have a couple percent in gold, then I just need to buy more of that. And it's more like a move for me to think, I don't want to have such a large dollar exposure in my portfolio. So I'm like very happy to literally buy everything. Like this is why I've also been ramping up the Pokemon buys, the MSCI World, the like index traded funds, the savings rate for that I increased massively. I feel like my overall crypto allocation is still pretty high. And Swizzy on Chain pointed it out, the poll that I also saw from Stats, asking people what amount of their portfolio is in crypto, and biggest part was still 70% and more. And it is still a very high figure for me. Like I am still in that category. So I'm happy to have my like long-term bets on Bitcoin, on ETH, on Hype. I'm still happy to hold a good amount of dollars, because ultimately you will have things like Plasma, where you just need dollars. Like you can't deposit euro there. All those things that earn an insane yield, a yield that you will never get in TradFi unless you go. I don't know where you get 50% yield on a stable coin without buying. You just don't have that. So you will still always need dollars. And then I'm finding it helpful to maybe like keep my main reserve in euro and switch to dollars if I want to participate in something. But it's more a move. And if you look at this entire thread, not only at the chart that you shared, and also the very recent, the very recent Kobesi letter that's explaining exactly that. We'll see rate cuts. We'll see we'll see interest rates going down as a result of the rate cuts, obviously, but also see inflation going up. We see US debt increasing, refinancing that debt getting more expensive because the treasury yield goes up. Nobody wants to buy the bonds. And then refinancing the new debt will also get more expensive. And you could have like a sort of debt spiral. And that is, it's a nice outlook for stock assets, for risk on assets, but it's not a good outlook for the dollar. So it's really a result of me thinking, where are we going, like from the standpoint of the fiscal system, and where do I want to be allocated in, and also just wanting to have more portfolio diversification, because I'm not in a stage in portfolio where I'm hunting this like exponential logarithmic increase. Like I'm very happy to grow my portfolio linearly, and this is coming from that perspective.
Okay. Yeah, a lot to digest there, I think, for people who are listening in. Where do we take that? So that's kind of from the perspective of us, kind of a portfolio that is slightly larger now. And I think I similarly took some off, even just a touch of Hype at around 45 a few days ago. I'm never taking anything off Bitcoin though. Like, I don't know, it's like a psychological thing. I keep buying more Bitcoin. Even if I'm trying to model the thing like, look, this is the unit of account. And I'll just buy a bit every now and again. And I bought as high as 118. I bought as low as 113 the other day. I bought more at 110. With just bits that I'm not intending to like sell at any point in time soon. So I do like just keep dripping it in, but I also like the idea of getting some gold, and maybe the physical side, I guess it doesn't really matter. You need to make preparations for whichever way you want to take gold, but you can also get it. You can do tether gold. You can do one other type of gold as well on chain. So yeah, I definitely want to up my allocation there. On the stock side, Brad, let's bring you into this conversation before we hit the main headlines here. I think you've always been fairly well allocated to the stock market as well, right? Like, is there anything happening in the world that's making you think you want to change that allocation, or you're happy with the mix between crypto and stocks? Like, what's your view?
I'm going to say a few things here. One, I'm going to a quick deviation and say in the background, I was checking out if Rabby actually did have hyperliquid perps enabled. And I realized that, yes, I just put on a long position on a thing. And 2, it required no VPN. So like, it's almost like this just gets me around like having to like toggle that every single time I want to do something. And I'll pay a little bit of a builder fee or whatever for it, unless it comes out of hyperliquid's portion. But it's pretty nice UI. It's pretty slick. Second thing is like Solana.
Oh, okay.
I think they're going to catch a little bit more of a bid with these DATs coming to the market, and like it's just kind of been beaten down recently, and it's been a little uptrend. And it's like this is like a couple $100 with a 5x leverage. Like this is I'm not doing anything crazy. I'm just like wetting the whistle again. Right. Okay, so then hearing I mentioned like 2 or 3 weeks ago on the pod that I have been listening to more macro pods, and I will say there's 2 things I want to call out. One, basically everything that Legendary just said that he was doing is where a lot of these larger traders are also positioning themselves. It's like basically no one wants a dollar, right? So you're doing into hard assets, whether it's actual gold miners, silver miners, or digital gold, because Bitcoin has the narrative of that. And that they didn't bring up Pokemon cards, but you know what? That's to come. When we're talking about the hardest assets in the world, we gotta talk about a Charizard. And I do want to say a shout out to you, B-Check, that specifically there was mention on a pod 2 days ago where they said no one is giving enough attention and underpricing the outcome of Ukraine war stopping. And I know you had mentioned that here on the pod. I think it was like a day or 2 before that. So I thought that was worth mentioning. Like that's like upwards catalyst. And basically it's just like, yeah, like the market itself broadly there's not a lot of like credible bear theses right now. Like, bro, they're like inflation's going to run hot for a little bit. Dollar's going to get liquidated. And I actually like this mental model where it's like the induced demand thing that we talk about, even with like block space and capacity or internet bandwidth, right? Like you increase bandwidth and you're like, bro, we have a 256 modem. Like what could you possibly need more than that? We end up getting like a 1 gig download. And guess what? Like we find things to fill the space that like is enabled by the next thing. And that is the mental model was mapping that over to basically inflation and the printing of the dollar, where it's like, even if you believe that things like AI is going to come and is going to allow us to be more productive with our assets and like be a little more flexible with the monetary policy, it's like, well, it does not matter because the people in charge are basically going to fill that void with printing as much money as they possibly can because they now have the excuse to. It's like induced demand of like efficiencies. Like just that's what humans do. Like that's what the people in charge do.
I really like that take. I heard that. I don't know if we were listening to the same thing. That was a new take that I heard, which I liked. I'm just going to respond in 2 ways before we need to keep it moving today. One, just to clarify, like the reason why the piece is relevant and why you get a kind of peace dividend, from my rudimentary understanding of macro, is that it means the energy prices come down, and energy is a huge part of the inflation costs, like the cost of energy being one of the biggest factors. And so if you get peace with Russia and just generally in that region, energy should come down, and then that really eases the pressure on inflation, which can come down, which can mean these damn rate cuts can go through. Or this is the line of thinking anyway. So I'm just connecting the two things for people to understand. And then that second concept, Brett, is really good because everyone thinks AI is so deflationary, because it means everyone's going to be more productive, and it means that you can make all of these savings, and it's going to bring the cost down of various things. But as you say, like the way this government is structured and the way the incentives are structured, they just, the way, I don't know if you were listening to the same pod, but if it's like a highway,
1000x.
Yeah, 1000x pod. Shout out to the traders there, Avi and Jonah. If you increase the capacity of a highway, there's just more cars, and it's like, okay, you increase the capacity of government's ability to print, they'll just print more. Like you make all these savings, and they just expand to fill the gap. So interesting ideas there. Hope that was an interesting kind of detour and discussion on general portfolio stuff. We're not able to say line by line exactly what we're doing, but I hope that's helpful as part of you making up your own mind and just how we're thinking about things at the moment.
I do want to say one last little bit is that I was surprised, like everyone's talking about AI as the bubble, and it's things are pumping hard. Another podcast that I was listening to talking about Nvidia earnings, and like even with it being a gajillion-dollar stock, several trillion, like it's one of the most valuable in the world, it's still only like 20x multiples. Like they're forecasting continued 50% growth year over year. They're like, bro, even today, when you take the average of the S&P 500, like they are undervalued as a stock, which is insane given it's like the what top 3 stock in the world, one point something trillion, insane. So I actually thought about like, man, maybe I need to like get a little exposure into Nvidia, just because like I had never even looked at it. I just assumed like it had run so much recently that it needs to like I don't feel like chasing it, but man, that's crazy. I want to have kill myself exposure to it.
I think there's a real chance that the best AI stocks are undervalued, but the bubble is in all of the chasing of what could be the next AI stuff. Like you're getting crazy valuations for things that haven't even got a product, or like there's a lot of speculative bubble behavior in the guessing game of like trying to pick who's going to be next. But there could be a very real scenario where it's like all of that stuff goes to zero. That's a humongous bubble, but Nvidia is going to double or something, or like, just go on an insane run still because it is so damn valuable, and ultimately AI is so damn valuable as well. Ledge, come in on the AI's thing before we move on.
Yeah, real quick one. I spoke about the kid yesterday, be on the show, who left OpenAI, was let go, and then had this like paper on like why AGI is coming. And he also did raise a fund investing in stocks around AI. And he did, basically to what you just said, like focused more on energy companies, semiconductors, like AI infrastructure and everything he deemed relevant, and did, I think, 48% year to date. So did outperform the S&P and did very, very well on that. Not trying to pick like the next big winner, but just focusing on the entire infrastructure enabling that industry.
Yes. Good addition. Okay. Very helpful discussion. I think we've only got just over 10 minutes left of the show today, so let's keep it moving. We want to, I think a lot of what we were talking is like in this general portfolio discussion, Ledge, is what you were maybe going to go into in the majors thing, but maybe just a word on Solana's outperformance from you. Like, what are you thinking there? Anything specific? Just a quick one.
Yeah, just a quick thing would be, we talked about the Solana ETFs yesterday. We see more and more updated filings. We see more news around Solana ETFs, see Solana ETPs. And I feel like that this news cycle, updated filings, is heating up. There's probably some speculation also going on those ETFs coming to market soon. And that might explain why we've seen Solana outperform over the last 24 hours.
And those digital asset treasury companies, which we've been speaking about the week before with me and Brad, big potential demand there if, there's actually cash in them, not just locked tokens. Okay, that's fine on that. One of the other big headlines today was the SEC and CFTC allowing trading of certain spot crypto tokens on US registered exchanges. This is the news that the SEC and CFTC registered exchanges are not prohibited from facilitating the trading of certain spot crypto asset products. They said yesterday this initiative is part of the SEC's Project Crypto and the CFTC's Crypto Sprint, and it builds on the recommendations of the President's Working Group on Digital Asset Market report. ICO had this to comment on it. Remember, ICO is a former lawyer like myself now, no longer literally practicing. But he said, don't let the bankers steal your coins, literally one forever. I don't think people realize how uncommon it is for joint SEC, CFTC staff statements up and to the right forever. I think one of the things that I think, was it Swizzy who commented on my post earlier this morning? It might have been Doodoo. I can't remember. Made it ship, like, again, we're just seeing like the merging of commodities, crypto, stocks, all trading in the same place as part of the rest of the news. We also had X stocks moving on to ETH. We had Ondo launching 100 tokenized stocks on Ethereum today also. So look, this is just part of this bigger trend, right? Where there are a lot of these assets going to be available everywhere at anyone's convenience all the time. And I think that's, I guess, the point to be taken away. And we've been trending in that direction for a while. And this administration is clearly deregulating sufficiently to facilitate that as fast as possible. So I think that's the main takeaway here. Ledge, do you have any commentary here, any specific thought as it relates to the specific news, or the kind of merging of shares and crypto and commodities and whatever?
I said it yesterday. I think that was the most relevant piece on my timeline, not on the show because it was later. The most relevant piece of news that I read in quite a while. That is how mass adoption is going to look like. Ease of access is everything. The easier it is to buy our tokens, the more people will get into them, and the more natural it becomes. And you had it in the Web3 Roundup that people speak about how Hyperliquid works on Bloomberg, and that this becomes so natural to talk about industry. And then you have that ease of access because you can use an US registered exchange to buy whatever stuff you want to buy. That is a massive news.
I agree. Can you imagine what they're thinking? They're like, sorry, what? How much of the cash flow they're using to buy the token? 97%. Like, what is a reasonable person supposed to do with that information when they're getting told that this company called Hyperliquid is making all this money and taking 97% of it and just aping it back? It's like, I mean, obviously we've got desensitized to how crazy that is, but in the real world, that must sound insane, like truly insane.
I was thinking about whenever he described it the first time, saying like, okay, they're talking about on Bloomberg. Like, imagine hearing the words that he's saying like for the first time.
That's what I mean.
With fresh ears. Like,
that's exactly
what does that even mean? It's like because like the mental models, all they have is stocks, right? That's all they can equate this stuff to. And they're like, wait, what do you mean? Every hour they take the money that's generated to buy up their stocks. Like, that's awesome. Like, that's a lot of buy pressure. Like, oh, and it's generating $1 billion a year. What?
Exactly. Like, what are you supposed to do with that information? Like, you'd be so confused. It's just crazy. Okay, good stuff. We've got one final headline left for today. It's the pump news, which I think is going to be super interesting to get into. But just before we get there, we just want to give a shout out again to our sponsor for today. We're excited to announce today's show is sponsored by the crypto game Gigaverse. Gigaverse has found PMF on Abstract. It's a very successful crypto game, and they have some huge announcements this week on which we're delighted to support. The first announcement is today's Gigaverse Egg Mint, which will take place at 11 a.m. Eastern time on OpenSea as an open edition for 7 days. More on that in a little bit. We've got the details here. It's going to be each egg containing one steed, and they won't be tradable for a while. The steeds are mounts to ride into the open world in game. You're going to have to go through a hatching process where you're going to undergo the hatching to mint the steed, and that will all take place inside of the game. More info on hatching and feeding will be shared later. This specific type of steed will not be sold ever again. And the specific details are that today, it takes place today. It's at 11 a.m. Eastern time. The price is 0.0069 ETH. So super affordable. I do not think it's designed to price people out. The max mint is 10 eggs per wallet, and it is also an open edition. So I don't think this is one where you're trying to buy and flip immediately. And it's going to be open for 7 days. So you got some time to do this. And the final point in terms of airdrops, Gigaverse ROMs will be airdropped 1-to-1 with eggs. And the airdrop will be after the mint and no snapshot until the airdrop. So be careful as always with scams. Only trust the official source, which is at Play Gigaverse on Twitter. And that's that. Hope you check it out. And just a final point, we did announce this giveaway yesterday, which we would be remiss to not mention. We did a giveaway where we said you had to like and retweet the announcement tweet yesterday. 2 things. One, the Modern Market community is going to get an exclusive item. And so we'll be collecting wallets for that shortly. We'll announce the details of that a little bit later in the week. And we said that we will give away $1,000 to a few wallets for participating in it by liking, retweeting, and sharing the wallet. So we had a lot of entries, and we'll be announcing the winner a little bit later today. So just to keep you up to speed there, that announcement will go out a little bit later. So shout out to our friends at Gigaverse for working with us this week to amplify their huge news this week. We're excited to do the rest of the stuff this week, which is pretty cool. It's going to be pretty cool. So getting back to the final headline, Bread, Pump Fun, Project Ascend. Are we going to be streaming on Pump Fun soon? Is that something we should be doing? What do we need to know here? What are the core details? What do we need to know?
We'll break down what it is and then kind of what the implications are. What do you think the second order
please.
effects are? So the headline itself, Pump Fun announces Project Ascend, a series of updates that will 100x the Pump Fun ecosystem by 10xing creator earnings. The TLDR of what they're doing here is they just have front loaded the fees that are paid out to creators and to CTO participants, or mostly just creators, at the start, like based on the market cap of a token, right? So like you can't actually see it here, but the table is very useful, and I will put it in our internal chat in case you want to pull it up. It's what like they just front load it. So based on market cap, they will go down, and at the bottom there's a little bit of a table. They basically just like slowly wean you off your creator fees. So you can see there on the left, that's the SOL price, or the market cap in SOL. And then the creator fees starts very high, 0.95%, and then weans its way down to very low, while staying static for the platform. The platform is always earning its 0.5, 0.2, 0.375%. It's just the creators are getting a bigger payout. And the thought here is that this will incentivize people to create tokens and see them successful, use that money for growth early on, to like see them through, grow them into successful cults, groups, tokens, whatever, just to try to pull them out of the trenches. The thing that is notable here is at the top, there's a little bit of a note that just says, like, obviously this is very specific to the pools that they control, right? So this reminds me a little bit of the Laudio setup. And I think what you're going to ultimately see is like Pump Fun's like, oh, cool, guys. We just like, we don't want to increase fees on everyone because then it makes it less valuable to actually like trade the token. But at the lower end of this thing, you're charging like 1.5%, whatever, total cumulative fees on people swapping these tokens. And this means there's incentive now for someone to come up, buy these early tokens. And if they want to think it's going to be successful, whatever, just spin up a pool with a lower fee on Meteor or Radium, wherever, just another competing DEX, right? Because then now you'll have two pools, one with a lower fee that you can drive all the volume through. So that's the same thing happened in Laudio. Laudio's entire thing was like, oh, guys, we have 10% fees on this token, but it's only on our pool. And, as long as they trade the pool, all the money will go back to you guys. It's so great. And then everyone just said like, okay, we'll just create another pool and then we won't pay the fees because I'm a trader and I don't give a shit about the creator. Like I don't want to pay them to own the token. So people do it and they continue to do it. So the question becomes if it's going to be automated, because like the lower end of the trenches is more high velocity, we'll say, right? So it's like thousands and thousands of tokens launched in a day. Is it enough, or is the incentive there for people to buy up supply, go spin up a competing pool, and then have all the volume run through their stuff at like 0.5%, right? You can cut half the volume off, and then all Jupiter will just automatically route you to that because it's a cheaper pool, right? It's a better swap now. So it's a good model. I've already heard people talking about like, it's a good model for creating incentives and like wanting people to start doing stuff. And I've heard people talking about migrating their stuff over to Pump so they can make more money because they're showing charts of like, with this model on the same volume of token, you would have made 10x the earnings, right? But Gainsey would have made $100,000. But again, that assumes that no one creates these permissionless, cheaper pools that are still profitable to create to run volume through, which I think is ultimately what's going to happen. It's going to get automated.
Interesting. Okay. Very, very interesting stuff. So what would your estimation then be for people who are creators here? And maybe this is a little bit of I wouldn't say a moral question, but it's one which people are very like reluctant to be involved with coins as part of their creating platform. Yeah. So maybe not like what do you think people should do, but what do you expect to happen with these like set of incentives? Do you think this is going to encourage people to?
We'll see more because most people aren't thinking about the second order effects of this stuff and like whether or not someone's going to create the game to avoid the fees to do whatever. They just see the numbers that were posted, and I will say, like, if you endeavor to be a streamer, I had mentioned previously that like Pump's attacking the supply side of the streamer problem, the streamer platform problem, right? Like if I were to be a streamer on basically any other platform, I would need to have a pretty sizable following and streamer like viewership to generate any money whatsoever,
Sure.
right? And Pump Fun now through this increased fees program, but also through just raw speculation that the market enables, allows for any creator to enter the market and to instantly have a little bit of revenue instantly. It's a non-zero number, right? So whether it's 1 viewer, 10 viewers, whatever, because there's bots in place that are going to buy up the token on the back end, just because it's the thing that right? They're going to speculate on it. They want to have some sniper who's going to want some portion of the supply of any streamer that comes and does something. So that means that like now all of these net new streamers are like, well, I could go over to Twitch, or I can go over to Kick, or I can go to wherever, and I could do it for a year and hope to make a couple bucks. Or you can say, well, fuck it, I'll just go do it on Pump. And I think the ticker coin on the back end stuff will get destigmatized eventually, just as it gets normalized, and people just do it. And like, I'm making $10, $100, $50 a stream, when I was like, it would have taken me a year, and maybe even like I never ever would have generated any money on these other platforms. So the supply side, if all net new streamers start migrating over to Pump to launch their shit over there because it makes non-zero dollars for them, eventually you'll have someone that's a breakout person, right? If it's a shots on goals thing, right?
Yeah, shots on goal,
and
right?
then that creates the viral loop, right? Then one person does really well, gets a viewership, starts attracting people because they're wild, wacky, whatever. Hopefully, like in a wholesome way, or just like not like with guns or some shit, like some weird shit.
That was the issue they've had before with streaming, right? People getting super extreme.
Right. So if it's like actual like quality content, we'll say, and they break out, and then they have a like, well, look, bros, I just made 250 grand on this token. You now have the viral moment that all other people that are aspiring to be streamers go, well, what the fuck am I doing over here trying to grind up for $0 for 2 years when I could go over there and potentially make tens of thousands of dollars, right? Instantly. That's what they're hoping for.
Ledge, what do you think? Final take here as we close out. Should we do it?
I don't know. I don't think. I mean, we could do it for a time, but I don't think it's super sustainable. Exactly to the point that Brett made. Very much reminding of Laudio. And even if you find ways around this, and you had this post up as well by Garga, it's basically summarized how NFT creator royalties have worked out and how the entire industry loved them at first and said, artists and everyone is so deserving of them, and then how we did everything to get rid of them, and how Blur was very, very successful at what they did and allowing to avoid royalties. And yeah, exactly what Brett said. Like, you see the numbers, you see 10x here, 100x there, but you don't really think of the second order effects that will come into place as well.
I like it. I think, yeah, it's interesting you bring up the NFT royalty situation. I think what sometimes people try to do in this space, and maybe we'll close on this idea unless you have anything to add, like they try to create a magic scenario where you don't have to do any work anymore ever again, and yet money continues to flow to you forever and evermore. And you just have to be able to put on your history hat and look at the world and to what extent that was ever possible ever in the past. And look, I think there actually are certain ways to do that. One is when you're like owning the rights over other people in order to own their production. So like arguably, if you were in the music industry and you sign an artist for, I don't know, however many years, you can kind of have endless revenue so long as that person keeps creating because you own their thing. But crucially, that person is still doing the work. Like, I think in this industry, it's like, okay, well, I'm going to create this NFT one time, and then I'm going to live on the royalties forever. Like, there's no such thing. In order for that thing to still be marketable, to still be valuable, you need to be producing more things. You need to keep the attention up. You need to be meeting new collectors. You need to be managing a whole bunch of stuff. So I think instinctively, my thought would be anything which suggests that it's like a magic pill for like perpetual revenue is basically never the case. And, you know, in the end, you're going to have to put the hard work in either way. And personally, I'd rather do that without there being a live token. We put the hard work in and we have sponsors. So we don't have to worry about a live token. Do I think that this could be a more popular way to do things in the future? Sure. Maybe it does get destigmatized, as Brett suggested, and maybe it becomes more normal. And I'm also open to that. I'm open to that in the future. But I think our model right now works beautifully. Maybe it's harder to get potentially, but I'm certainly not against doing things which are harder to get. In fact, I think those things are more more worthy of trying to attain, because if it's harder to get, I don't know, I just think it's better. Ledge, final take here. You looked like you wanted to come in.
Yeah, that's ultimately, you know, the dream of infinite passive income. There's a whole industry in Web2 that tries to sell that to you. Record a course and sell it on Udemy, and you will make passive income. Write a ebook and sell it via Kindle Direct Publishing.
True.
Fulfilled by Amazon. Start drop shipping shit. And here's how I make 50K by doing nothing and selling you this course for $300. There's an entire industry chasing this passive income, don't work, generate money out of nothing. And ultimately, the only thing that is sustainable passive income is your money making more money by earning yield on that.
Yeah, because
at that point you need to put the hard work in to actually have substantial capital that can then farm and provide for you.
For sure. And the only reason those courses or whatever sells is because you continue to stay relevant as a personal brand by producing, you know, by still capturing people's attention and putting yourself out there. So the work doesn't really stop. I actually do like the idea of courses personally. Or digital products.
Yeah, they're great, but they're not free, passive, infinite income. They're hard work to get them off the ground and get them to work.
Yeah, exactly. Guys, great discussion. I really liked today's show. Went through a variety of things, getting some comments. So we like the portfolio discussion. We should try and do this once a week at least. So maybe we'll try to do that. Managed to touch on some of the core crypto stuff, as well as some of the more creative side as well, which we're obviously super close to, paying attention to all the time. So hope you enjoyed today's show. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live for 1 hour, live on X video, YouTube, and you can catch us on Apple and Spotify podcasts if that's how you prefer to catch up with the content. Thanks to Legendary and Bread for joining me as co-hosts. The three musketeers are back together, and thank you so much for joining us, whether it's across any of the platforms. We will be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.